Hello dear traders, welcome back to Insta TV. You're watching Daily Financial News with me, Anna Kasatkina. Ahead of today's reports from the Australian labour market, most currency strategies had predicted a shift in trading sentiment regarding the Australian dollar. However, there were also some analysts who had expected the Aussie to plummet by 18%. Such a sharp price decline was forecast by experts from the macro currency group. As it turned out, they were wrong. Despite serious threats for the Australian economy as posed by bleak prospects for the global commodity market and China's economic health, many participants of the forex market still chose to go long on the Australian dollar rather than its US counterpart. As seen on the price chart, the Australian currency skyrocketed versus the US dollar by 80 pips. Ahead of the European session, the Aussie greenback pair was trading near 0.7150. Such a behavior of traders towards the Australian dollar was a natural reaction to unexpectedly strong data from Australia's labour market. Experts from the National Bureau of Statistics convinced most investors that things are not too bad in the Australian economy, following the recently published batch of data showing that the Consumer Confidence Index returned to its historical average while business confidence in the region improved. Today's jobs reports point to an economic recovery. According to the figures provided by the Australian Bureau of Statistics, employment rose by 58,600 in October after 8,000 Australians lost their jobs in September. Most analysts had projected a less impressive increase by 14,800. Given the considerable upswing in the number of new jobs, the jobless rate dropped from 6.2% to 5.9%, which was a pleasant surprise for the financial markets that had not expected any significant changes. Meanwhile, the participation rate of the Australian population also edged up from 64.9% to 65%. However, such upbeat figures may seem somewhat confusing. Economists still remember the errors made by the country's statistical service in calculations of labour market data. Some investors are incredulous about today's reports and they expect the readings to be revised in the near future. Therefore, apparently the data from Australia has triggered a wave of short-term bullish bets on the Australian currency. This was Daily Financial News on Insta TV. Thank you and goodbye.